In recent years, the BRICS nations Brazil, Russia, India, China, and South Africa have been seen as potential challengers to the traditional Western powers' dominance in the global economy. Among them, China has emerged as a superpower, and some predict it could take over the world economy. Today, we explore this topic and examine how China could use the BRICS to achieve its goal of world economic dominance. Here is the rise of China's economy. In the past few decades, China has become the world's second-largest economy, with a GDP that has consistently grown at an annual rate of 6 to 8%. The Chinese government has invested heavily in infrastructure, education, and technology, creating a highly skilled workforce and developing an innovative business ecosystem. China's trade relations with the world have also expanded dramatically, with China becoming the largest trading partner for many countries. This is how China plans on taking over US dollar. China has been using the BRICS to further its goal of world economic dominance. It has invested heavily in the infrastructure of other BRICS nations, providing loans for roads, ports, and other major projects. This has created a deep economic dependence among the other BRICS nations on China, allowing China to leverage its economic power to increase its influence over them. Additionally, China has been working to establish the yuan as a major global currency, making it an alternative to the US dollar in international trade and finance. Finally, China's yuan replacing US dollar, also known as the renminbi, RMB, has been gaining international prominence in recent years. Some experts predict that the yuan could become the world trade currency, replacing the US dollar, which has been the dominant currency for decades. The yuan's rise as a global currency is due to several factors. First, China has become the world's largest trading nation, with the yuan being used in a growing share of international trade. In 2020, the yuan was the world's fifth most used currency for international payments, accounting for around 2.5% of global payments, up from just 0.6% in 2014. China has also been pushing for the yuan to become a major reserve currency. In 2015, the International Monetary Fund (IMF) added the yuan to its basket of reserve currencies, alongside the US dollar, euro, yen, and pound sterling. This was a significant milestone for the yuan, as it became the first currency to be included in the basket in over 30 years. China has been actively promoting the use of yuan in international trade by signing currency swap agreements with other countries. Currency swaps allow for the exchange of one currency for another, providing businesses with greater flexibility and reducing the need for them to hold large amounts of foreign currencies. China has signed currency swap agreements with over 40 countries, including Russia, Brazil, and South Korea. The Chinese government has also been liberalizing its financial markets, making it easier for foreign investors to access its markets and invest in yuan-denominated assets. This has helped to increase the demand for yuan. Growing prominence, there are still significant barriers to it becoming the world trade currency. One major obstacle is China's strict capital controls, which limit the ability of foreign investors to access its financial markets. Another challenge is the lack of convertibility of the yuan, which means that it cannot be freely exchanged for other currencies. Overall, in conclusion, the yuan's rise as a global currency is a significant development in the world economy. While it may not replace the US dollar as the dominant currency in the near future, it is clear that China is making a concerted effort to increase the yuan's international role and challenge the dominance of the US dollar. As China's economy continues to grow and evolve, the yuan's role in the global economy is likely to expand. Whether or not the yuan will eventually surpass the US dollar as the world trade currency remains to be seen.